So now we're going to get into some smart money concepts. So what is smart money? Smart money is the big money. It's the big money that's spent in the stock market. So as traders, we want to know when, where, and how that big money is being spent. So we want to be on the side of the big money. We call it following the smart money. All right, and the smart money is done by institutions. So these entities, they're using millions and millions of dollars to make moves in the market. And the goal is to move with them. All right, let's get into smart money concepts. Retail traders. Retail traders place transactions in the stock market for their personal accounts. So that would be the category that most of us will fall into, myself, most likely you included. Now, when we do these transactions, they are not large enough to move a stock or to move the stock market. When it comes to information, we can take courses, we can read books, we can make sure that our technical analysis skills are up to par. We can find an edge in the market in a variety of ways. However, we don't have the access to high-level information, the insider information. We don't have that level of access. But institutional investors or traders, they have the access to that high-level information, the high-level data. All right, let's talk about these institutional traders. Now they place large transactions in the stock market, large transactions. And when they do this, they do have the power to move the stocks, a stock, or the market. They have the money, the bandwidth to make or cause huge moves in the stock market. All right, and that is due to having access to high-level information. All right, so who are these institutions? They're your banks, your credit unions, your pension funds, hedge funds, insurance companies, venture capital funds. All right, now some of the most common ones, or the ones that you may have heard of, would be Vanguard, BlackRock, Goldman Sachs, JP Morgan. These are the big time players in the stock market. So again, we want to be on the same side of the trade as them. When they buy, we want to buy. When they sell, we want to sell. That's the whole goal of following the smart money. Manipulation. So it's important to understand that as traders, we're up against these big time players and they have the power to manipulate the market. All right, so again, we can't cause big swings in the stock market. So since we're up against these institutions, we have to keep an edge and we have to make sure that our technical analysis skills are really good. That's why I always say, be sure that you're studying your charts. Become really good at reading the chart. When I first started trading, I wasn't good at reading charts. So I'm telling you now how important it is to really hone that craft. So when we do that, we can employ the proper strategies and we can find that edge to fight against these big time players and not be on the wrong side of things. All right. So let's talk about supply. Now we all have heard of supply and demand, right? But when it comes to the stock market, we can find supply zones on a stock's chart. These zones are usually at the top of an uptrend. So when we get into these supply zones, they almost act as resistance areas. And when price action gets into those zones, we can look for the price action to head to the downside. So that would be a supply zone. All right. Over a period of time, the stock will rise back into that same supply zone and race back down again. So price action can come into the same supply zone multiple times. All right. The key, as we always go back to the word patience, we want to wait for price action to come into a supply zone before we buy puts. That's the safest entry. All right. Now demand. Demand zones can also be seen on the stock's chart. They are at the bottom of a downtrend. So you have supply zones here, demand zones here. So we want to see when price action is moving up and down in between these zones. We prefer to buy when price either comes down into a demand zone or up into a supply zone. That's going to be your best time to buy, the safest time to buy. And that's when these institutions typically buy and sell as well. All right, so again, we want to follow the smart money. So in a demand zone, we're looking to buy call option contracts because we're expecting the price to head back to the upside. Supply and demand. So again, it's going to give us an edge. When we mark these zones on our chart, we can wait, and when price action comes into either of these two zones, then we can pull the trigger on a trade and get in and have a high probability trade go in our favor. All right, so very important. So let's go ahead and look at this chart. Now, you see down here at the bottom you have a demand zone, and at the top you have a supply zone. So let's look over here. You see that price action has come into this zone multiple times. So I'm sure you're thinking, well, this reminds me of support and resistance. Well, it is. But we draw zones, and I'm going to go more into how you draw these zones. But every time the price action came into this demand zone, what happened? It went to the upside. All right. Now we get up here, and every time the price reached this supply zone, it was rejected, except for right here. It pushed through one time right here in this area. But you see, we have multiple touches right here, and right here into this same supply zone. And every time, price was rejected and went to the downside. And here you had a sharp push to the downside from this supply zone. So when we talked about long-term investing, some people, if they don't have the time to scalp trade or they don't want to swing trade, they just want to buy their option contracts, and they want to hold those for long periods of time, 3 months, 6 months or more. If you can identify supply and demand zones, you will have a great chance in being profitable on that particular entry because you have time for it to go in your favor and you're buying in the supply or demand zone. Okay, let's look at another chart. Okay, McDonald's. So now this supply zone, you see we have a downtrend right here. What we want to look for is the candle that precedes the downtrend. So when this downtrend started, it really started right here. The candle that precedes the downtrend is this green candle. But then let's move over here. We have this green candle. So I drew the box basically to include both of these green candles. Okay, so before this downtrend started, we draw a box to encompass the candle that precedes the downtrend. All right, so that is how we get our supply zone. And you see price action move to the downside. But then we get down here at the bottom and we're moving to the upside. So we go all the way up from this downtrend. Now the candle that precedes the move up is going to be this tall red candle right here. We take a box and we draw a line from the top of this red candle to the bottom of it, and we drag it straight across. That's how we get our demand zone drawn. The candle that precedes the move to the upside. We draw a box from the top of that candle. We include the wick as well. If there's a wick, you include the upper and lower wick. So again, at a downtrend, we want to find the candle that precedes the move to the upside. So let's say you have the candle right here and the uptrend starts here. We want to draw a box from the top of this candle to the bottom of it, and we want to drag that box across. That's going to be our demand zone. For supply zones, we want to look for the candle that precedes the move to the downside. Draw a box from the top of that candle to the bottom of it, and we drag it straight across. Now we have our supply zone at the top. As long as we have these zones, we can sit back and wait until price returns to these zones. And we're going to talk about the time frames, and we talk about that more and more as we get into the course. But when we draw these zones on higher time frames, that's the better. All right, especially when we're going to be long-term investors, or if we're going to swing trade. If we're going to hold contracts for days, weeks, or months, then we want to try to draw these zones on like the daily time frame. You know, we don't want to draw it on a 1 minute time frame or a 5 minute time frame. Now, when you're scalping, you can draw these zones on 5 minute time frames or lower time frames. But for long-term investing, we want to draw these supply and demand zones on higher time frames. All right. Let's go into Chevron. Same deal. Let's start over here on the far left. Before this sharp increase in price, we have this small red candle. So we drew a box from the top of that red candle to the bottom of it, and we took that box straight across. So then we had our demand zone drawn. Price action goes up here, comes down, goes up here. So here we had a nice sharp decline in price. Right here we had one, I guess you could have drawn something right here, but I like this one better because when you have a sharper decline, I think it just makes for a better supply zone. So I chose to start my supply zone here. So before the big drop in price, and then we also came further. Here we only came down to this point. But once it got back into this zone, we came all the way down here from there. So I took the candle that preceded the move and I drew the box from the top of the candle to the bottom of it, the candle that was before the big push down, and I took that straight across. So that gave me my supply zone. All right, so now, as you can see at this point, price isn't in either zone. It's just moving sideways. So from here all the way to here, if you want to be conservative, you can still play this action, this action here. You can still get in. However, if you want to be on the safer side and you want to take the highest probability trade, you would want to wait until things came back into one of these zones. And that's what happened down here on the far right. Price action eventually returned to this same demand zone that was started all the way here on the left hand side. So here is where we could have taken positions in for call option contracts, because it's not breaking through the zone. We have multiple touches into this zone, so we could take those call positions. And again, this is a strong demand zone. So for long-term calls, you would have gotten in here and been profitable, because as you see, price action did what? It moved to the upside. All right, so it never returned to the supply zone. But in the future, as this chart would have continued, I'm sure at some point it returned back up to the supply zone. Okay, so this is how we play supply and demand. We want to buy in those zones. All right, Tesla. Now this is a smaller time frame. This is a 5-minute chart, and each candle here represents 5 minutes, 5-minute candles. So now let's say you're scalping. So a lot of times scalpers, they'll have their 5-minute chart visible. Now as you see, before the steep downtrend, this candle preceded that move. So what I did was I took my box tool and I went from the top of this green candle to the bottom of the candle's wick, and I took that straight across. At that point, I had my supply zone. Now let's start over here on the left though. Now before this move to the upside, this candle, this red candle, preceded that move to the upside. So I did the same thing. I took my box tool and I drew the box from the top of this red candle to the bottom of the red candle, and I took that box straight across. So at this point, I had my supply zone and my demand zone drawn. So once we went up here, made a supply zone, came back down, all right, came back down here, we tapped this demand zone. We tapped it right here. All right, so we didn't fully go into the zone, but as you see, price action did come into this demand zone. It tapped it with this wick right here. And then price action moved back to the upside into where? Back into the supply zone. All right. So again, you can do this on multiple time frames. A 5-minute time frame, a 1 hour, a 4 hour, a daily time frame, but they work really well. Moving right along, we have another 5-minute chart here for Nvidia. So before the move to the downside, this green candle preceded that move to the downside. We took that box tool, we went from the top of the green candle to the bottom of that green candle and took that box straight across. That was our supply zone. Once we got down here, before the move back to the upside, it was this candle. This candle preceded that move, so we drew our box using this red candle and we took it straight across. Now we have established our supply and our demand zone. Price action comes back into this supply zone. Now this is where a trader could have taken a position in put option contracts. Since we have come back into a supply zone, and it's likely that price would reject and head back to the downside, and that's exactly what it did. Came back down here, touched this demand zone, and then just slightly went up afterwards. Didn't go up much, but just slightly. So this could have been a good play for put option contracts. All right, so supply and demand. That's what we look for on every time frame. If you're scalping, or if you're going to be a long-term investor, or if you're going to swing trade, you always need to know where your supply and demand zones are. Okay, another 5-minute chart. The candle that precedes this move to the downside is going to be this green candle right here. All right, we took our box, went from the top of this green candle to the bottom of the wick, and we moved it straight across. That established our supply zone. We come down here, and before the move back to the upside, this candle precedes that move, this red candle right here. So we took our box tool and did what? Same thing we always do, you guys. We go from the top of that candle to the bottom of it and drag that box straight across. Now we have our demand zone. All right, so again, drawing these zones is super important. We want to buy in these zones. All right, let's talk about dark pools. Now, a dark pool, they are private exchanges in which stocks are traded only by institutional investors. Institutions, they use dark pools to place huge transactions that aren't immediately revealed to the public. These transactions are typically delayed and reported on the next day. So dark pools, these are accessible only by the big time players. All right, let's say an institution wants to buy $800 million worth of Apple stock, not using the dark pool. So two things would happen. Number one, it would cause major volatility with Apple stock very quickly. Two, that $800 million worth of shares would not be filled at the same price. So let's say Apple was trading at $150.50. So you have a portion of all of those shares get filled at that price, and then we have two different prices here. So you can see it's close to 150. You got 150.54, 150.57. But when you place a large order like that, not using the dark pool, if an institution were to do that, they wouldn't get the order filled at the same price. And they want to get the order filled at the same price all across the board. They don't want different prices because they want the best and the lowest price. That's why they use dark pools. Okay? So they use these dark pools to avoid causing major volatility. All right, so that's what dark pools are used for. But we want to know what's going on in the dark pool, even though we can't make trades using the dark pool. We want to try to get a feel for when these things happen. Okay, now there are a few platforms. You have black box stocks, and then you also have Flow Algo. And this is what I'm going to talk about here, Flow Algo. So again, I'm not endorsing Flow Algo. I'm just using them for an example. So you can check out black box stocks. You can check out Flow Algo, but you do pay monthly for these platforms. All right, but they give you additional information as to when these large orders get placed. So here in this example, on December 26, 2018, 43 signature prints registered in Flow Algo. All right, so we have SPY right here. We have SPY. We have the spot price right here, 234.32, and this is the amount of money that was spent. Now this is green, all right? This is green, so everything is bullish. This is a bullish. These are bullish buys, you know, in the dark pool. And you can see $118 million, $118 million. Again, and again, and so on and so on. So this is eye-opening. And when we have this kind of information, it can just give us an idea of how we want to trade moving forward. So let's go into this a bit. On this day, on the 26th, SPY opened at $235.97. The high of the day was $246.18. The low of the day was $233.76, and the closing price of the day was $246.18. So the spot level, right, the opening price is above the spot level. All right, this opening price is above this spot level price. When that's the case, it's a bullish sentiment. Now, what happened over the next few weeks? Let's look. So we're down here. Now, as you can see, after this, price action went to the upside. So when we get this information using a platform like Flow Algo or black box stocks, we can get this kind of information. This information is not going to be on CNN. It's not going to be on any local news outlet. You know, this is information you get using these platforms. So as you can see, had you gotten this information, you could have bought SPY calls and made money as the price action went up over the next few weeks. So this would have been a good example of a swing trade. All right, this wouldn't be a scalp trade. Or ideally, you could have scalped it and made money in one day. But if you would have bought SPY calls with an expiration, let's say for 3 weeks out, you could have held that call or those calls, and the value of those calls just would have increased more and more over time. Okay, so this is where it becomes advantageous to know what's going on with dark pool transactions. All right, a bearish example. Now this should be October 10th, not December 26th. But let's look at the prices here. Opening price, well, okay, on SPY. So we have SPY. Let's look over here first. We have the spot price, $287.40. The money that was spent, $145 million multiple times. Look at all of this heavy volume. Big time dollars. Big time dollars. Okay, so let's go back over here. We have the opening price, $286.83. The high of that day, again, it's not December 26th. It's going to be October 10th. The high, $286.91. The close of that day was $277.88. The low of that day, $278.30. So now the spot level is $287.40. That's what registered right here in these 43 signature prints. If the opening price is below the spot level, it's viewed as a bearish sentiment. This opening price, $286.83, is below the spot level of $287.40. All right, let's see what happened over the next few weeks. October 10th, right here. What happened? From this point forward, price action went to the downside. So had you gotten this information, you could have taken a position with put option contracts and made money as the price for SPY went to the downside. Again, this would have been a good swing trade. You could have held these put option contracts for a number of weeks and made money as SPY's price declined. So it's pretty good. Again, you pay for these platforms, but it's really good information to have. It's just good. You know, it's not. It can only help you. It can't hurt you. And those signature prints, so below 9 is normal or average. But if it's plus 15 or 20, now we get to where we're above average and extremes. So the more signature prints at the same spot level, that's key, at the same spot level, that's when we want to keep our eyes open. All right. Let's talk about block orders, because using a platform like Flow Algo or Black Box Stocks, you'll see block orders, you'll see split orders, and you'll see sweep orders. So we're going to talk about all three. Block orders are orders of more than 10,000 shares made by institutional investors. They are typically broken up into smaller orders and executed through different brokers to hide the true size. The institutional investors, they will use a block house to place these orders. So let's say they want to sell 200,000 shares of a company at the market price of $10 per share. That would be a $2 million transaction. If placed as a single order and not broken up into smaller orders, the stock's price could be pushed down. So the block house will break that order up into manageable parts to avoid impacting a stock's price. All right, so let's say here they choose to split that block trade up into 100 offers of 2,000 shares. So then the block house, they find buyers for those orders. That's pretty much all that happens. Now, when you follow block orders, it's good when you're looking to swing trade or for long-term positions. So perhaps you would look for option contracts with expirations of a few weeks or a few months out with the information you gather from a block trade. And then at times you'll see them highlighted in purple. Those are the ones that stand out a bit more. Sweep orders are multi-exchange orders, and they're executed with great urgency as the investor is looking to get the best price possible as soon as possible. These orders, it's about speed, so they're looking to get in. They're looking to get in, all right? And they want to take these large positions as quickly as possible. Now, with these sweep orders, they want to get a good price, but speed and execution is more important. They're looking to get into this trade quickly. So with sweep orders, we like block orders, but sweep orders, they stand out a bit more, especially if you're scalp trading. All right, because the person or the entity that places the large sweep order, they're looking to get in quick, and they're looking to get in quick for a reason. Okay, so it gives us an idea of where a stock's price could be headed. All right, and with sweep orders, we also look for the ones highlighted in purple. Let's go to split orders. They're just like sweep orders, except they come from a single exchange. These orders aren't as low key as sweep orders, but they aren't placed over multiple exchanges. All right, they aren't placed. Only the split orders are placed over single exchange. Sweep orders, multiple exchanges. All right, but again, if you're a scalp trader, you're gonna be looking more at those sweep orders when they pop up. All right. Now, I'm gonna go into 3 videos, and that will close out this module. All right, so I'll catch you on the next one, you guys. All right, so this is Flow Algo, and now this one is a paid subscription, so this one is not free, but as you're gonna see, the information that you can get here is very valuable. So let's start. What you see here is the positions that all were placed this morning. All right, see, they're coming in live. And today is January 30th, and it's 10:09 p.m. I'm sorry, 10:09 a.m. Eastern Standard Time. So as you see, starting from left to right, you've got the time that these orders were placed, the ticker symbol, Amazon, the expiration date, all right, they're coming in, the expiration date of the contract, the strike price, whether it was a call or a put, the price that Amazon was trading at when they made this transaction. This 272 is the number of contracts, and this 129, you just multiply that number, of course, by 100, and then that number you multiply times 272, and then you get $35,000. So this person has spent $35,000 on Amazon calls. All right. So you take 129 times 100. Of course, you get 129, and then multiply that times 272, and that gives you $35,000. All right, this is a sweep here. All right, so you're gonna have sweeps, you're gonna have blocks, but this is gonna give you an idea throughout the day of what's going on, and it's just valuable information to kind of inform what you may want to do on that particular day. Now look on the right here. You got the equity blocks and dark pool prints. So this is where all of your dark pool information is going to be housed, all right here. If you go up here to the box, you can type in, let's say, Tesla, and you can separate it. So this is going to give me everything for Tesla. So you can go up here and separate the information by the ticker symbol, back out, You can go here to unusual. I like to go here because this is out of the money option contracts that expire soon. So we go to unusual, and we can take a look here, get more information. All right. Now on Amazon, the 177 strike. Okay. All right, that's what we just looked at. We got Carvana, we got Alibaba. All right. So this gives you information on some unusual option activity. More Amazon, Tesla just popped up. All right, so someone got $208 strike, $200 strike. All right, and Tesla spots at 193. Okay, so now this person just spent, but now look at the expiration date. This is March. So this person has a little over a month for these for this option play right here. So they've got some time on it. But they just spent, as you can see, over $600,000 on calls. All right, so just gives you an idea of what you can take a look at. Golden, no information right now, but this would give you all of the golden sweeps right here. Click on sweep, and this will break it down by all sweeps, so no blocks. All sweeps on this page. All right, go back here. So we can just see, again, time, ticker symbol, expiration date of the contract, strike price, whether it's a call or a put, the price, the spot, the price at which the stock was trading at the time of the purchase. This number here is going to be the number of contracts, and this number here, you'll just multiply times 100, and then that number, you'll multiply times this number to get this number, which is the price paid. All right. So Flow Algo is pretty cool. I have it on, throughout the day when I'm trading, just to get an idea of what's happening, and it's really good. Then you got other tabs here as well. You can, okay, so it didn't work. So you can get a breakdown here of the bullish flow of the day and the bearish flow of the day. So today shows you NVIDIA 13 orders. All right, $8.6 million. Tesla, Amazon, Google, SPY, Carnival Cruise Lines, Netflix. All right, so you can kind of get a view here as well. Kind of shows you what's going on for the day. And you can do by today, yesterday. It's gonna load. There we go. All right, this week, so you can get a breakdown that way as well. What's another good tab here? Let's see. This shows you some unusual volume activity. And they even have charts here as well. And you can see it looks very similar to TradingView because it is TradingView. All right. So this app, again, I think is worth the subscription. I think it's worth it. And then here you got some chatting you can do as well. So when you get your subscription, you can go here and talk with other traders and, maybe get some ideas or, just talk about whatever you want to talk about in this area here. All right, so this is Flow Algo, you guys. Just wanted to show you this, but you can come here to get information about what you want to do as far as your trading and what the smart money is doing. What are the institutions doing? What are the big time players? What are they buying and how much are they buying? And that will inform what you may want to do with your investing endeavors. Another feature they have here in addition to everything, is this voice alert. So everything that comes up here can be called out to you. So if you have another page open, like let's say you're in TradingView and you're searching through your watch list, checking out what you want to get into for that day, you can have this turned on.
Voice alerts on.
All right. So the next thing that pops up, she's going to actually call it out.
C56 calls. February 2nd, 2024, 500 contracts.
Okay, so
SPY 490 puts. January 30th, 2024, 511 contracts.
all right.
CCL 17 calls. June 21st, 2024, 800 contracts.
All right, Flo Algo girl, you better stop cutting me off. I was trying to say something. She kept jumping in, but yeah. So that's useful. Just
TSLA 208 calls. March 15th, 2024, 500 contracts.
you got one more time to cut me off. All right, but as you can see, you know, if you have another page open and you're looking at information on any website, that voice alert will still come through for you. So just
C62 calls. June 21st, 2024, 1,053 contracts.
Okay, I see.
AMZN 170 calls. March 15th, 2024, 500 contracts.
All right, okay, I see. Okay, you want to keep cutting me off. Okay, you want to keep cutting me off. I got something for you. How about turn you off? So you see, I just turned it off. So if you don't want to hear it, you can go ahead and hit this button here. If you do want to turn it on, you hit that button there. But I just wanted to show you the Flo Algo girl. She can come in here and she can call those alerts out to you if you're on. She can call those alerts out to you if you're on another page. This here is another really good website to check out, and it's also free. Quiver Quantitative. QuiverQuant.com. You come here and guess what you can find out? You can find out what the politicians in our country, what are they investing in? So that's really good information because, hey, they may know some things that we don't know. They may know of some things that's coming up on the horizon. So we really want to be tapped into this also. So you come here, and we all have heard of Nancy Pelosi. So we can click on this, track Nancy Pelosi. What is she up to? Now recently, it came out in the news, she purchased a bunch of NVIDIA shares, and that purchase is right here. You got the date it filed, the date it was traded. And let's click on that for more details. And we can see the description right here. She bought 50 call option contracts, okay, of NVIDIA. 50 contracts. Now, this is a huge purchase, and it's good to know. If we go back, let's go to the home page. Warren Buffett. We all know about Warren Buffett. Let's check him out. Okay, his company, Berkshire Hathaway, and we can see what stock holdings they have. This can also give you an idea of what you might want to invest in. So you've got Apple, Bank of America, American Express, Coca-Cola, Chevron. So he's got his positions here, and you can see how many shares of each company he has, and it tells you. Warren Buffett, I mean, he's one of the all-time great investors. So this guy, you may want to check out, and let's see, what is he doing? Go down further. All right, so it shows his holdings, and you can check it out there. Let me go back. Okay, Michael Burry. Let's see what he's up to. Okay, so here you can see his stock holdings, and then you can see his option holdings. All right, so you can see puts. Okay, you can see, looks like he got rid of, he doesn't have these positions anymore. He sold. He had some put option contracts on SPY and QQQ. Okay, but he has put option contracts here as well. So SOXX and BKNG. All right, let's click on that and see if we get more information. All right, we don't get any more information there. But let's just see. SOXX, what is that? That is, I think, okay, that's a semiconductor ETF. Remember we talked about ETFs. So he got put option contracts on this. Oh, we got a bearish engulfing candle right here. That's interesting. Interesting for sure. And that's probably at an all-time high also. Let's zoom out. Yeah, it's at an all-time high. So he got put option contracts. So whenever you find out information on any website or the news, just always come and look at the chart. So let's jump back over. All right, so wow, spent a lot of money. 100,000 contracts. Okay. So what does he know? You know, kind of makes you ask the question, right? BKNG. What company is that? BKNG. Okay. Booking Holdings. All right, well, look at this. Now that, if that's not a bearish candle, goodness, look at this candle. Huge bearish candle. Totally engulfed this candle right here. Oh, wow. That is amazing. Okay. So this is just another site for you to get some ideas to take a look. His stock holdings. What stocks does he have in his portfolio? You know, you can see everything. Okay, what is, you can see if he, let's go back up here. And you can see exactly MGM. What else we got here? Okay, and then you can search the names of politicians. Let's see if we type in Tesla, what happens if we select Tesla. And it gives us more information here. It actually gives us a lot of information on Tesla. And you can see the date the trade happened, a sale or a purchase, and you can see who in the Senate made the move on Tesla. So Quiver Quantitative, again, pretty cool site. Check it out and see what you think.